Zomato's earnings. Let's find out how it's stacking up. Their revenues have declined 1% quarter on quarter, and their EBITDA loss has gone up to 265 crore rupees. Let's find out more from my colleague Vinny. And also joining us on this part of the show is Rahul Jain, an analyst who is going to help us decode the numbers being posted by Zomato this time. But Vinny, how's it looking overall?
Overall, Vikram, numbers do seem like they were in line with what we're expecting. Yes, around, the revenue growth, 2,363 crores is what the revenue is coming at versus last quarter, which was 2,107. So quarter-on-quarter basis, there's an increase, but do not forget that it's not fully comparable quarter-on-quarter basis because last time there was a consolidation of Blinkit coming in as well. We were expecting the adjusted EBITDA to be at 260, around the 250 crore mark in terms of the EBITDA loss, coming at 265 crores versus last quarter of 192 crores. Food delivery business continues to be EBITDA positive, second consecutive quarter in terms of the adjusted EBITDA being positive for the food delivery business, coming in at 23 crores versus last quarter it was 2 crores. Now the company has highlighted one thing, that they are seeing a bit of a slowdown what they saw coming in since October, but in the recent few weeks, at least in the food delivery business, they started seeing a recovery coming in. Obviously, people have started stepping out, going in for restaurants. So yes, that's a factor that is coming into play as well. That is why the gross order value for the food delivery business is muted, is what we were expecting. So 0.7% is the only growth that we are seeing coming in on a quarter-on-quarter basis. But let's go across to Rahul Jain, who's here with us from Dollar Capital, to talk to us about the numbers. Rahul, very good evening. What are you making of the numbers? What is the first cut that is coming in from you? How are they looking like?
Yeah, for us, this number looks slightly disappointing because this is like a sequential decline in a seasonally better quarter. On top of it, the commentary also reads that they have not seen any change in the period so far. So the January has not changed for them in terms of the demand environment. So that is something not very exciting. Secondly, even from an MTU point of view, it's like going down. So the point is that is this purely a demand kind of a situation, or it is also a function of some normalization of incentives and cashback, which has been an exciting part of the growth in the past. In the absence of that and optimization efforts, probably this could also be an impact, so which could be more longer than what we see.
Now, one more thing in terms of the monthly transacting customers. Obviously, we all know that everyone's stepping out now, back to normalcy. So in terms of order delivery, yes, it's going to be a bit less. So does that mean that those monthly transacting customers will remain flattish like they've remained as of now? Like when you compare it with last quarter, the 17.5 million monthly transacting customers, right now is 17.4. So will that trend be, will it be flattish growth now for some time?
Yeah, some of the reasons that we could attribute out here is, lower discounting over the last couple of quarters. Also, we must note that the Zomato Pro Plus kind of a loyalty program was also off, which has now come back in a different version just a few weeks back. So if that is one of the attributable factors, then part of it could be there again. But this is a clear battle between growth versus profitability. That is what we see in the past, and that's what we think at this point as well.